Throughout my trading journey, I have tried many different things, but there have been very few that have made such a massive improvement in my trading results that I wouldn't be in the place I am now without them. And today I'm going to show you how it works, why it works, and I'm going to be sharing the indicator with you, but you will have to stick with me until the end so you can get the indicator. First, let's start off how I found these indicators, or better, why I even needed to get these indicators. When I started my journey as a systematic trader, I was trying every single indicator under the sun to try to different things, and I was trying to do everything via automation. So I was trying to automate the stuff. And one of the key difficulties with that was that while many of those things would have good results in backtest or in different things, there was always this part that you heard from other people in YouTube and that I read in forums, which was, this strategy works best for this market. This strategy works best when the market is trending. You should stop it, or you should stop trading this whenever you have a sideways market. Those type of things in which any strategy that you're applying will not work in every single market condition. And that's a very difficult thing to deal with when you are trying to apply systematic rules, because the whole point of being a systematic trader and of becoming an algo trader is that you want to do exactly the same thing always. So that was something that, even though I was able to create strategies that would work for some time, they will always stop working, or they will have equity curves that were maybe you have some good results sometime and then very big drawdowns and then again movement. So during that stage of my career, my strategies always had that big jumps up and then big jump down in terms of their equity curve or in terms of the results. And when I was doing my automated trading, I kept having the problem of optimizing and re-optimizing and reworking the algo was way too much work. And it was always in a cycle of, you have this thing now, it looked like it worked, you put it there, but you need to start working again on the next thing, because you know that whatever you have running now, it may work, but it will probably stop working in a few weeks or a few months. So it was always a cycle of the constant grind of getting things and trying to change fast, because I had my systematic strategies, but I had to keep moving them and updating them to adapt them to the current market conditions. That led me to trying to find a way in which I could make my strategies more stable by trying to apply some of the things that maybe you have heard me talk about in some of my previous videos, which was my origins as a price action trader. Trying to apply those things of market context, which is a key factor in price action. But as algo traders, as I mentioned, it was always mentioned, but it was never a solved thing for the strategies that we were running. That led me not to find the answers on trading YouTubers or anything like that, but it was actually still on YouTube, but on my broker's channel, which was DarwinX at that time. They were running a series of very, very interesting videos on quantitative methods in order to, and applying things to algos. But in one of those parts of the series, they were talking about some pseudo market context stuff. And that's when it hit me. I had to take the concepts from market context, apply them, and try to make them into a parameterized thing that I can just make is high, low, basically a yes, no. So I have a green light, red light system for my systematic trading to be able to know when they can trade, when they shouldn't trade, or how they should trade depending on the different market things. So how did I make it into something that it's a single indicator? So that's the main thing. So what does this indicator that I talked to you about at the beginning of the video have anything to do with all of the things that I just mentioned? The thing is, this indicator that I made is taking the 3 core variables in market context and applying them into one single block, into one single mini dashboard, to say it in a way, that you can use as a trader. And as a systematic trader, it can make your strategies go from being very volatile, very unstable, into having more stable results that you can rely on for longer and longer periods of time. I put the 3 core parts of the market context into one single indicator. If you wanted to see this indicator, you can click in the description below, but stick with me, because I'm going to be talking about how you can use them in order to apply them to your own trading, even if you are not a systematic or algo trader. The big thing that these indicators allow me to do is it allowed me to have a dashboard-like view, so that I can apply that to any of my algo strategies, and they can know exactly when to trade and when not to trade. So for algo traders, it allows your strategy to go from those very jagged, very volatile equity curves into a much more stable equity curve so that you can keep your settings and you can keep your strategy working for longer without having to do any major changes. And interestingly enough, even for manual traders, applying these concepts is very useful because one of the things that we have seen here at the site to trade that manual traders struggle with whenever applying the discretion, whenever applying the strategies into the correct markets, it's the complexity of understanding or defining what is really a volatile market, when things are going sideways in terms of the markets. How do you define if that is a good condition for you or not? Etienne has mentioned it in the past many times in the channel that he stopped trading with support and resistance areas, not because he didn't find success in them himself, but because it was so hard to teach someone else to successfully trade them because everyone just sees things differently. So even though sometimes manual traders can have the concept and the things in similar places, the thing that can make or break your trade, it's sometimes about those subtle things that make it so that a seasoned trader would take that trade versus not take that trade. Those things usually go back to market context. And this indicator, it allows you to just almost have it as a go, no-go type of situation in your trading so that you know that the market context is aligned with your strategy. So you can know when the market conditions are correct for your strategy and you can take the trades versus whenever they are not aligning for your strategy and you can skip those trades. Now, let's dig a bit deeper into what are even these market concepts. I keep saying it's all about market context and I distill the 3 cores of market context into these things, but what are they? Some of these things are surprisingly simple, but they are not being used consistently by traders, and that's the problem. That's why I mentioned that they are so vague, sometimes so nebulous for many traders, and why I made this indicator. The first thing is simply the trend, not trend filter. And that's just the first part, because that one allows you to be able to trade, to know if you are trading a with trend strategy, then you know you have to be with your trend. And if you are trading a reversal strategy, you know that most likely you want to be trading when there is either not trend or when your trade setup is an against trend setup. The second concept is volatility. We always hear traders complaining about the market is too volatile, the market is not volatile enough. Depending on the strategy you are trading, many scalpers love volatility. The more volatility there is, the more money they make. And many trend traders, the more volatile the markets are, the more they get whipsaw in the trades. So it's very important as a trader, you know your volatility, but volatility is not always the same. What I found that works best, it's relative volatility, and that's what I built into my indicator, which allows us to know if the market relative to itself, relative to the past, to what is normal for this market, is it being very volatile or is it being low volatility? And then within those blocks, then you can see if the conditions will be adequate for your strategy or if they will not be adequate for your strategy. For example, many scalping type mean reversion strategies, they thrive in volatility because the more volatility there is, they mean that the more they can try to pick those small tops and bottoms in all that noise, in that volatile market. And then the last thing, it's the other part that traders complain all the time whenever they go lower time frame, they start trading into the lower time frame. And that is market noise. We always hear traders say that the higher time frames are better because there is less noise in the market, there is less candles that are, the moves tend to be better. But this concept of market noise in trading, it's one that we can also apply into our trading. That's a security factor in my market context indicator. And what that just tells me as a trader is just that if the market is currently in a position in which it will allow me to take larger targets or not. When the market is very noisy, that means if I'm trying to trade a trend following strategy that depends on taking big targets, it's more likely not going to work because the market is just being noisy. That means that my target either has to be small or better, I skip the trade. So these are the 3 things that constitute my core vision of the market context. And this has really changed how I see trading. And it has massively changed the results in my algo trading. And talking about my algo trading, it has made it so that instead of having to be doing portfolio updates every 3 months, now I just have to do portfolio updates every year. So that has made my life a lot simpler and more profitable. So again, if you want to be able to use this indicator and apply it to your trading, you can find it in the link below. I will also be having a video to teach you how to use it and how to see the framework so you can apply it to your trading no matter which style you are using, and you can see how it can really change the way you are trading and take you over that hurdle from break-even to become a profitable trader. So check the link below if you want the indicator. If you have any questions, or if you have already heard about this concept and you have other ways in which you're applying it, comment below. I will be happy to read what other things you have been trading with market context in your trading.